Hey traders, Akil Stokes here of Trading Powered, and welcome to this week's live room weekend review. Now, because we had a shortened trading week, I'm going to do something slightly different with today's video. Instead of doing a normal flashback and review of the week that was in the live room, I'm actually going to walk you through a single trade that I took, and well, this particular trade happens to be my trade of the week. And I say that not because it's the most pips I've ever gotten off a trade, just it's a very good example of what can happen when you do correct structure analysis and really when a trade turns out exactly how you thought it would be. And actually, when I was finished this trade, now here's a great example of the feeling I got. Stumbled across that today, and I just needed to share that with someone. But don't get me wrong, it was a great week actually in the live room. I'll get into details about that in the written review. And actually, we had a very good week in the syndicate. And one of my syndicate members contacted me today and said that he's made 300 pips already just from trading ideas this week that came through the syndicate. Now, I'm not sure what he took. As you can see right here, we've posted a lot of opportunities, just scrolling through some of the charts going up all the way, really just starting on July 1st. But it's good to see that traders of all levels are able to access that and take advantage of it, whether they're learning what a pattern is or really just getting a look at some other pairs they didn't have a chance to before. So I'm pumped to hear that, and hopefully some of the other members out there are having similar success as well. But here goes the trade I want to talk to you about. It's on Euro Yen, 60 minute. And if I bring this up, Euro Yen, actually let's go out to Euro Yen 240 and delete that. Actually, that's a pretty good looking butterfly pattern there. If I go to Euro Yen 4-hour chart, here's what I was looking at. And just give me 1 second to load more data. Alright, there we go, data loaded. Here's what I was originally looking at on Euro Yen. There were two key structure levels that I was paying attention to. The first was right here at about 129.88, and the second was about right here at 131.29, and really a little lower, about 131.22. I'll draw my line right at the tops here. And here's why I was watching this level. At the time, price action was pushing up. We were on about this candle right here by the time the end of June came. And this was a key decision point for me. I knew that depending on what this candle did, this was going to dictate which way the market would move. If this structure level held right here at this blue line, if that structure level held and price action was unable to break and close above it, then I knew there was a good chance that, well, we'd see a retracement and we'd push back lower here on Euro Yen. On the other hand, if price action broke and closed above this structure level, creating a new structure high, then I knew that there was a good likelihood that this market would continue up. And this is where my if-then thought process came in, I guess. If this market put in a higher high, higher close, then I would assume that this price action is going to push up. If price action is going to push up, the next question I want to ask myself is, where is it going to go to? And this is where I drew in this level right here. Here's our next key structure level. You can see we hit it a few times just looking left. And if I start to bring in some Fibonacci analysis, taking a Fibonacci retracement from swing high to swing low, let's bring in my 707, which is a minor Fibonacci that I use. You can see there's a 707 Fibonacci retracement right on that level. If I bring in a Fibonacci extension from swing low to swing high, basically our last up move, you're going to see I have a 127 extension that lands right on that move as well. And lastly, if I bring in a Fibonacci inversion, so taking my same Fibonacci extension tool but inverting it from this inside leg and bring in my 1414 minor Fibonacci inversion, you'll see that they all line up at this level. So when I see a big Fibonacci cluster like this works the same as structure. It gives me a good level that the market should act like a magnet and it should be drawn to that level. So as soon as I saw that break and close above structure down here, I knew that the market would most likely come up to test this level, and I think I had about 31.20s marked off. Now, going down to the 60-minute chart, here's what else I knew. When the market creates a new structure high, and we assume that the market's going to push up as it did, we often don't go straight up. We usually get a retest of previous support turned into resistance. And that's exactly what I was looking for. I was looking for the market to spike up a little bit, come back down, retest the previous structure level, and hopefully get a chance to ride this bad boy on the way up. And that's exactly what happened. As I zoom down, we were watching the market at the beginning of the live room right around here. Here's our break and close at this candle at 4 o'clock in the morning on July 1st. You can see we broke and closed above that structure level. We kind of played around with it a little bit, teasing it. Then we finally broke up, came back and tested it a little bit. I'm asleep at this time. This is 11 o'clock at night. And we finally broke up during the European session. Now, when I got up about 5 o'clock in the morning, I saw this candle come in right here. And this is actually I think this was an 8 o'clock candle. Anyway, I saw this candle come in right here at a retracement, and what I was paying attention to was how the market react to this level, especially the close of this blue candle right there. And you can see if I zoom in, you can see that price action never closed below that the low of that wick, which was a very good sign for me. Now, what I decided to do right there was use an entry technique. I chose the H3C, the higher high, higher close entry technique. And as soon as we got that on this third blue candle right in here, you can see a higher high, higher close. Not only do we break above the wicks of these two previous candles, especially this low one, this is my trigger one, but we close above it as well. That's when I decided to enter at market. And well, the rest is history. You can see we've shot up. I had target 1 sitting at a retest of the structure level. And for target 2s, I actually made a brief adjustment. Originally, I had target 2s right at about 31.20 because, again, this was the level higher time frame that I was expecting to be hit. Now, what I decided to do was take my Fibonacci extension tool and invert it one more time. Take this swing low to swing high and back down and just see if there's anything else lining up at that level. I was actually doing that because I was going to look for a potential stop in reverse where I can also get short as well. But anyway, when I did this, what I noticed was we had a 1618 inversion right here at 31.12, which was a pretty important level. And I had to ask myself this question. You know, right now, target 2s were sitting at about 90 pips. I took 30-something off at target 1s. Looking at 90 pips for target 2, or I'll say about 100 pips for target 2 if we went up to 31.20. And looking at about 92 pips for target 2 if I put them right underneath this 1618 extension at 31.10. And the question I ask myself as a trader is, when I'm shooting for 90 pip targets, is 10 pips really worth a little more risk? I know this level is important. Is it really worth 10 more pips to try and fight it and spike up a little higher? Or do I say, well, I'll take 90 pips instead of 100 and put myself in a little safer position? And as you can see, the market turned on a dime, came up to 131.11, which was one tick higher than my targets, and we've since rolled back over. So in hindsight, it looks like I made the right decision by getting my, it looks like, I did make the right decision by getting my second targets off right here because I would have got stopped out for break even. Now, a decision like this doesn't just come from first-time experience. I've had plenty of trades before where I've tried to fight off these levels and I've lost. And what I've done is I've just taken notes each and every time that's happened. And eventually I've realized that, well, Akil, you need to stop doing this because you're just blowing money. You know, you're getting stopped out for break even and leaving 60, 70, sometimes 100 pips on the table by really being stubborn. So I wrote that down, made adjustments to my trading plan, and now I make sure to check if there's anything in the way of second targets and if there's a safer place to put second targets, not getting too greedy. And the same thing goes for news releases as well. I had a trader I talked to today on Twitter who said that he missed getting filled the Aussie dollar last night by 3 pips right before the news release took it down. And you know, for certain news releases, especially when Aussie news comes out, because there's not as much liquidity in the market, and that major news releases for Aussie tend to really, really move those pairs. It's not a bad idea to start keeping track of what happens during that time period. You know, if you have a trade that's maybe 5 pips away from target, maybe it's worth putting in a rule in your trading plan that says, well, if I'm in a trade and it comes within blank percentage of target one and there's red news coming out or major fundamental news coming out, then I have permission either to take profits and move stops to break even or whatever it is. I'm getting off topic right here. Anyway, want to show you guys this trade. Want to keep this video short. Hope you have a great 4th of July weekend, and I'll see you guys back in the live room on Tuesday. And syndicate members, Jason and I are going to keep pumping in those patterns, and I'm liking the responses so far. And keep trading, and let's make a lot of money together. So until next time, traders, trade your plan your trade. I'll flip that around. Let me do that one more time. Plan your trade your plan, and I'll see you guys next week.